In this video, let us do the base quality analysis of NTPC. So this is an old chart, 31 August 2023. As we have been discussing, this base breakout examples that I am showing you, the purpose of this base breakout analysis is to help you become very good at technical analysis, especially for breakout trading strategy where we only look at stocks which are in a confirmed stage 2 uptrend as per Mark Minervini's book. And as per the regulations in India, I am showing you old charts, old bases. Once we study these bases properly, it will help us understand what to do in the future, what to look for in a base in the future. Okay. So this is NTPC. Let me draw the base. Just because there is a base doesn't mean that we buy the stock. Okay. I will explain that in this video. I would explain to you why I wouldn't buy this base. So, base quality analysis. Is the price above all the three moving averages? Yes. So, price is above the blue, green, red. Is the price within 25% of 52-week high? Yes. This is the 52-week high. So, this is August 2023. If I go to August 2022 here, so what's the highest price during that 1 year period? This is the highest price. That's the 52-week high. What is the current price relative to the 52-week high? It's less than 3% below the 52-week high, correct? So it is within 25% of 52-week high. What is the length of the base, number of candles in the base? It's 21. See, 21 bars. So 21 candles. How many candles do we need minimum in the base? 10 candles. Why do we need 10 candles? 10 candles means 2 weeks. 1 week is equal to 5 candles. We need at least 2 weeks of consolidation on the daily chart. If you are studying the weeklies, there you need 3 weeks of consolidation. Okay. Points in the base 6. So let me draw the points for you. So point 1, point 2, point 3, point 4, point 5, point 6. Okay. 6 points in the base. Fantastic. Is there a falling window inside the base? No, there is no falling window. Buy point is in the blue zone. So the high of this candle, which is 222, that's the buy point. So 222 and yellow color, that's the buy point. Where is the closing price? Closing price is also in the blue zone. Fantastic, right? We want tightness on the right side of the base. Then mother baby candle. Is there a mother baby candle? No. I checked. If I look at these two candles, the low of these two candles is the same. So point number 4 is the low of the green candle, which is the latest candle. So we don't see mother baby candle combination in the latest 4-5 candles. Favorable candles more than 50%. Yes. So what is favorable candle? I convert this to a bar chart. So let's see. Let's look at the red bars. This red bar is high volume, so ignore it. 1, 2, these are low volume red bars. Okay. 1, 2, 3, 4, 5, 6, 7, 8, 9. Out of 21, 9 bars are there which are red on low volume, which means down closings on low volume for 9 days out of 21. So 9 out of 21 are in our favor. Then you have this candle, sorry, this one, which is up closing on high volume. So 10 candles are in our favor. What else? This candle is high volume up closing. 11 candles are in our favor. So whenever there is up closing, for a green bar, we need high volume. For a red bar, we need low volume. Very simple. Okay. High volume, low volume, how do you decide based on this blue line? If the bar is above the blue, it's high volume. If the bar is below the blue, it is low volume. If the bar is at the blue, it is average volume. So How many green bars are there on high volume? We count that. How many red bars are there on low volume? We count that. Those are the number of favorable candles. So out of 21, 11, 11 bars are in our favor, right? So it's more than 50%. Shakeout, there is no shakeout inside the base. There is hardly any, the base is very tight, right? Grade is A, the base height is A. There's a very tight base here. The stock has not given up too much from the top. See, less than 7% distance from the top to the bottom of the base. Green zone closing 0. So after point 2, how many candles have closed inside the green zone? 0. But in this case, that doesn't matter because the base height itself is 7%. So even if there were 4 points in the base inside the blue zone, it still makes a good case for a stock. We can say that it's still technically strong. Less than 5% distance to buy point. So the distance between the closing price and the buy point, less than 1%. It is upward sloping moving averages, blue, green, red, everything is sloping upwards. Okay. So what else we draw? We draw another line here. So for example, 1% above this, we draw a line that becomes our, that yellow line becomes our buy range. Then from here we draw a line at 8%, somewhere here, yeah, here. That becomes our stop loss. So it becomes 8. That's 8% stop loss. Then for target, we go up 20%. See, we go up 20% somewhere here. Yeah. So here I draw another line. Then we'll go another 20%, 25%. And we'll draw another line here. Okay. Let's do both these lines as green. So we have our targets. Then this is also green. Now, before I discuss more about the stock, let's look at the breakout and see whether the stock is able to uh, break above the base and reach the target. So I will take the price forward. Massive candle, 4.72% rise in a single day. High volume. The volume is roughly 70-80% above the average daily volume. Continues to go up. Let's see whether it hits its target. How much time does it take? I suppose it did hit its target. So we are in November. Continues to go up. Yeah. So here on this day, it enters that sell zone. So if we count the number of days from here till here, 61 bars. So 61 working days, that's a long time, from 1st of September till 1st of December. So September entire month, October entire month, November entire month. So it took 3 months for the stock to reach that selling range. So 20 to 25% return in 3 months. That's a fantastic return, but it tested a lot of our patience. Now, some of you might get confused. You might say, Rohit, how is it 3 months, but the number of bars are only 61? Well, the number of bars is the day, the bar for the day, the candle for the day. There are 5 candles in a week. Sometimes there are 4 candles in a week if there is a public holiday. Okay, so if the distance is 3 months, doesn't mean there will be 90 candles. Okay, we have to exclude the weekends. We have to exclude the public holidays and everything. So that is why I don't look at number of days passed or the time passed. I look at the number of candles that have uh, taken place between the buying point and the uh, selling range, when the stock actually entered the selling range. I will remove this. But the question is, would I have taken this trade? The answer is no. I will explain. So at the time, this was a swing trade because I believe the uh, sales growth. So EPS growth was, I think, 24% consolidated at that quarter. So this is August. So June quarter results were out. EPS growth, I think at that time was 24%. I just checked before making the video, but sales growth was like minus 6%. So obviously, this is not a positional trade. Okay. In a positional trade, we want good sales growth, good EPS growth, 3 quarters of acceleration in EPS growth, 3 quarters of acceleration in sales growth. Those are characteristics of a positional trade. So this is a swing trade. Okay. If the sales growth has declined, forget about declining growth. There is no growth. There is actually degrowth. So this is not a positional. This is a swing trade. And during this period, the market was, just a second, this is August 2023. So let's go to market conditions. So this is like 31 August 2023. Let's go down. So here, 4th August till 11 September, it was uptrend under pressure. Okay. Now, remember what I had taught you. You can only take a swing trade when the market is confirmed uptrend. And at that time, the market was in uptrend under pressure. Okay. So you can't take a swing trade. So that single condition alone would allow me reject the stock. So this is a swing trade and the market is uptrend under pressure. Okay. No matter how many points here are in our favor, I will not take the trade because in uptrend under pressure, the market is falling from the top. And when the overall general index is falling from the top, chances are very low that stocks will break out from their bases because the uptrend is under pressure. In swing, what we are trying to capture or catch is that swing, the upward momentum, the upward swing. That is less likely to happen in uptrend under pressure. So no matter how great this base is, I would stay away from this base. Now, even if it achieves the target, if you notice, even if it achieved the target, it took a lot of time to achieve the target. A good, nice breakout wouldn't take much time to reach its target. Some of the previous examples you must have noticed, some of the stocks hit their target in less than a month. Okay. And this took 3 months. So that's because the fundamentals were weak. It was a swing trade. It was uptrend under pressure. The stock somehow held its strength. This also goes to show you that even in uptrend under pressure, stocks can still reach their breakout point, reach their selling range without touching the stop loss. Okay, talking about stop loss, I would never keep a stop loss so far from this buying point. In such cases, I would keep my stop loss at the low of the base. So that would significantly reduce the risk. Now, some of you might argue, Rohit, it's a nice tight base. Why not take a trade? See, I am not telling you not to take a trade. I am not telling you don't buy. I'm just telling you that if you buy, if you take a swing trade in uptrend under pressure, you are taking additional risk. As long as you are willing to take that risk, I don't have a problem. You can, as long as you understand the risk, as long as you are precisely able to calculate the risk based on your position size and your stop loss distance, and you are aware that you are getting into a risky situation, take the trade, no problem, right? Because you could buy here and keep your stop loss at the low. That means you could keep the stop loss at point number 6. In that case, your stop loss would be like 1 or 2%. It would never be 8%. So with the same position size, you're going in with like 1 or 2% stop loss. So overall risk is anyways controlled. So you could still take the trade, no problem. I never said don't buy. The rules and the guidelines that I created for swing traders is to protect these swing traders from themselves because they will look at any base saying, Rohit, there are 6 points in the base, there is blue zone. Okay, let me buy this. Okay, so I want to protect swing traders from themselves. That is why I have imposed that strict rule that only take a swing trade when the market condition is in confirmed uptrend. That will at least uh, you know, uh, eliminate or reduce the losses that you incur. You're putting the odds in your favor when the market is in a confirmed uptrend. Another thing is, just because the market is in a confirmed uptrend doesn't mean that all stocks are going up. The confirmed uptrend status should coincide with number of stocks forming tight basis on the right side. If both the things are not happening on a daily basis, that is not a sustained confirmed uptrend. Okay. So just because market smith says it is confirmed uptrend doesn't mean that we take a swing trade. We have to do our own analysis also. We have to use our experience also. We have to check how many stocks are showing up in the filter on a daily basis. If I filter the stock market today and if I get five trades, five out of five are swing, and the market is in a confirmed uptrend, what does that mean? It means there are no positional trades. That means fundamentally strong stocks are not showing up in my filtered list of stocks, which means there is something wrong in the market. Or the fundamentally strong stocks have ran up so much that they now don't show up in my filter because they have fallen from their tops. So since I'm only getting swing trades, five out of five are swing, that means there is something wrong in the market. Fundamentally weak stocks are holding up, and fundamentally strong stocks have broken their 50-day simple moving average. That is not a healthy market. Correct? So those are the things that run through my mind. Okay, I do use a checklist approach, but this is checklist approaches. I created this for you. I use this checklist in my mind. Okay, when I look at the base, all of these things automatically run through my mind. I don't have to check all this because I have looked at thousands and thousands of charts. I don't have to look at this checklist again and again and again. Okay, you do this for 1 month, you will also get very good at understanding a base. You don't have to look at the checklist every day. Your mind will get trained, your eyes will get trained to the chart. Okay, thank you so much.